As we close out another year, many businesses are focused on the year ahead and what the upcoming 12 months will look like for their company. While it's always important to plan for the future, it's also important for companies to look back at the year that has passed and make sure all books and records are complete and accurate. Part of this process is making sure the financial records for the prior year are closed out properly. Whether the user of the records will be internal management, tax preparers, auditors, or other third parties, it's important for a business to make sure everything is properly recorded so that all users have the best information available. There are a number of steps that should be taken to make sure the year-end financials are complete and accurate. First, we recommend keeping your books open for a little longer than you normally would. This will allow any outstanding bills from your slower vendors to come in so they can be recorded in the proper period. While most companies are reconciling operating bank accounts on a regular basis throughout the year, now would be the time to catch up if this hasn't been done. In addition, it's important to make sure to reconcile all bank and investment accounts as of December 31st. This will ensure that all activity has been properly recorded. Once the reconciliations are complete, they should be reviewed for any uncleared items. Any old checks or other transactions that have not cleared the bank as of year end should be investigated, potentially voided, and possibly reissued. Next, you should review all outstanding customer receivables for collectibility. If there are old receivables that you do not anticipate collecting, you might want to consider either writing them off or recording an allowance for uncollectibility. Continuing down with the assets on the balance sheet, the next step is to review your prepaid expenses. These represent cash paid in advance for expenses that cover future periods and are often only updated on an annual or quarterly basis. It's important to review what is currently sitting on your books, but also review any bills that you may have paid that should be recorded as prepaid expenses because they cover a future period. This will ensure that only expenses related to the current year are reflected on your income statement. Next, your fixed asset listing should be reviewed and compared to what the company still has on hand. If this listing contains items that have been sold or otherwise disposed of, they should be written off. Another important item to consider is the accounts payable aging. This should be reviewed for any old bills that are still outstanding, because now might be the time to consider them paying them off. This is especially relevant if your tax return is prepared on a cash basis. Conversely, if there are bills that you do not intend to pay for one reason or another, now might be the time to write them off. While we have already recommended leaving your books open a bit longer after year end to capture any slow bills, a company should also consider any bills that are still not received when the payables are closed. If there are services that have been performed or goods received for which a bill has not been received, it's important to record an accrual in order to reflect the expense in the current year. Lastly, we recommend taking an in-depth look at your income statement. It's useful to compare both monthly and annual activity for the current year and compare it to actual results from years past. Often, large or unexpected fluctuations can be an indication that something is not properly recorded. If this is the case, the next step would be to review the transactions contained within that unexpected balance. This will help to identify the cause of the fluctuation and will either lead to a correction or it will help the user understand the resulting numbers. In closing, the most important thing a company can do at year end is to take the time to review their full set of financials to ensure that all amounts are updated and supported. This will ensure that your audit, tax, or other review process go as smoothly as possible.